All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, ladies and gentlemen, the 19th of August, 2025. Still, I wanted to pick up on a few economic data sets which are happening this week, and actually all of them are from the same category: inflation. Look, before we jump into that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. This week we do have a few important inflation numbers coming out, including today. Today we have the Canadian CPIs. Before we also jump into that, quick mentioning of our Markets.com website, which you can always check out for more information about it. So if you have any questions, reach out to us. We'll be more than happy to assist. So let's jump into the economic calendar very quickly. So today, as I already said, Canada's core and headline CPI numbers are coming out. So let me just refresh the page just in case there are maybe new updates on the estimates. So what do we see here? We see that the year-on-year headline Canadian CPI, the inflation number, is expected to come out a little bit on the lower side, 1.7. I can see that on other sources it's kind of telling me that maybe it could be 1.8. So either way, it is on the lower side from the previous number. Now the core one is expected to come out the same as 2.7, the previous one. So hey, look, if we're not mistaken, the Canadian inflation target is around 2%. So basically midpoint around 2%. So it's between 1 and 3. What can I say? It's a little bit over. The core one is a little bit over, but the headline remains near the target. So in a way, we can say that the problem here is that oil continues to decline, bringing headline inflation further down. However, the service sector in general is still feeling more towards the upside, right? I mean, so in a way we can say that there is some progress, there is growth. So this is what the economy kind of wants to see: growth. However, as always, we know that there's a very thin line between kind of letting it go too much, and basically then ending up with much higher inflation. So anyway, long story short, look, for now, what we're expecting here. So we're expecting a lower headline number and the same core figure on the year-on-year side. Looking at the pairs here, let's say USD CAD, looking at the Canadian dollar against its neighboring rival, we can see that the Canadian dollar has been weakening slowly after kind of rebounding from this little short-term upside line taken from the low of the 16th of June. We started pushing higher. We're now kind of stuck in between my EMAs here, the 50, the 100, and the 200 EMA. So in a way, this is not my preferred spot to do anything with it, but because whenever we get stuck in between the EMAs, in between moving averages, I kind of try to take a pause a little bit and wait. However, it could present itself with some nice opportunities, especially if we do pop above the 200-day EMA and stay above it. Then yes, I will target that psychological 140 zone. Also, if we do drop below the 50-day EMA, then I'll certainly in the short run I'll lean again towards a possible test of this upside line, which is, as I said, taken from the low of the 16th of June. Now, if inflation comes out, let's say, on the higher side a little bit, then this could, in a way, strengthen the the Canadian dollar a little bit. And certainly, yes, we could see, this one reversing back down, maybe falling back below the 50-day EMA right here. Certainly, if inflation comes out somewhere around the same level as expected, then I think that it will remain subdued here. I think it could stay the same. Just the pair would not maybe move that much. And yeah, I mean, this is where, like I said, this is where it wouldn't be as exciting as as everybody would like it to be. However, look, in general, to show you, to illustrate how we have been so far, we have been moving so far on the inflation front here in Canada. I'll launch these two charts. So the headline inflation number here, you can see. Overall, we have been declining, right? I mean, however, recently we started shifting back up a little bit here on the headline, on the core. You can see the shift happened a little bit faster. So basically, you can see that the lower oil prices. Where's that oil? Let me just jump into there. Lower oil prices are actually not really helpful for the Canadian dollar, Canadian economy, yes, and as we know, Canada relies heavily on oil exports. So these dropping oil prices are really not really helping out, like I said, the country. Anyway, for now, I believe that the oil price could continue drifting lower further south, and I think that we're aiming for that psychological $60 mark. I think it's quite possible. We're not far. So I talked for a long time here on my on TradingView. I even have a little piece that I threw out that actually not only one, a few. I kept on saying that if we do fall below the $65 mark, I will start shifting my attention towards the downside, and we got that. So yes, $60 mark, here we come potentially. So yes, coming back to the situation here with the Canadian dollar. Let me just jump into that one. So USD CAD, we're stuck. We're stuck in between the EMAs. So we're waiting for that kind of move here. We know that the Central Bank of Canada has kind of lowered its rates to the 2.75 level. Lately, they have remained kind of flat with the same 2.75. I don't think that they are going to go lower unless it's really going to get bad. If they really need some stimulus. So 2.5, maybe that could be an option, because that could bring them back to August of 2022. That's when the rate, last time it was before August 30, actually, yes, August 20, at the end of August, we were at 2.5. Then they've hiked the rates all the way to 3.25 in September of 2022. So in a way, with inflation kind of picking up, the other problem arises that they cannot really go for those cuts. On the contrary, they would need to consider hikes. However, the problem is the slowing of the Canadian slowing down of the Canadian economy. It's not really, let's say, growing that fast. However, it's still okay. Don't get me wrong, but still, the problem here that everybody starts talking about now is the potentially stagflation, where you're gonna see higher inflation, higher unemployment, but then lower growth. So then that would be a little bit of a bummer, I would say, for the country, and there could be a little bit in the pickle. So long story short, unemployment remains around 6.9. That's the latest figure. So around, still below that 7%. And I think that, yeah, this is, if we suddenly cross the 7% mark, I think that that would be a little bit of a problem for Canada because again, this would lead us to numbers that were last time seen in 2020 at the around mid 2021 basically. So and then of course that could lead to further devaluation of the Canadian dollar in my opinion, and we could see this one actually popping further north here. So for now we're being very careful. We can see the overall picture that the Canadian dollar has been devaluating recently. Kind of it since February of this year it started strengthening, but now I think we're after kind of crossing the midpoint of this year, it seems like we're reversing course. Again, let's see if that's going to be sustained because, sorry, something caught in my eye. Let's see if that's going to be sustained because I don't want to, like I said, I don't want to say anything. I mean, if this reversal is going to be strong enough, or maybe the U.S. dollar will remain on the weaker side, because again, we know that the DXY is right now, well, not the strongest one. Not the this is DXY, this is the dollar index. So in a way, there is a chance for DXY to continue sliding. And if that's the case, then well, the Canadian dollar could just kind of strengthen automatically, against the US dollar, and we could see that situation in USD CAD where we could drift back down again. Maybe this move higher right now could have been classed as a little temporary correction before another possible leg of selling. So that's in case of the Canadian dollar. Very quickly on other inflation, another country which is delivering its inflation, and that's the United Kingdom and the British pound. Here, of course, British pound traders are watching this very closely. So we can see that the current expectation is for a slightly higher number here on the headline side, 3.7. Well, what can I say? It's a tricky one for UK because again they have their inflation target around 2%, if I'm not mistaken. Let me just double check. I think everybody has this. Yeah, I think everybody has around 2%, all the top major central banks. So yeah, 2%. So we're a little bit further off, almost double the off. So 3.7 comparing to 2%. So yeah, that's a little bit. Core also expected to come out at 3.7. So it's pretty much close. So let me just launch the headline CPI number here. So what you can see here is that after such a crazy drop here we had, at the end of 2022, inflation was around 11%, and then it kind of quickly shifted back down, so stabilized around just a little bit below 2%, dropped, and now we're pushing back up. So if you would ask me to apply technical analysis on this, if I would apply Fibonacci retracement, so I would say 4%. I think this is the 23.6 on the Fibonacci retracement. So again, of course, don't get me wrong, you don't do that, but just out of fun. So yeah, 4%. I think this is something that we're looking at. I think it's quite possible. This is where kind of last time it stabilized a little bit. We're heading in that direction. I think if it hits 4%, the bank will start, thinking really, really carefully if they want to go and do more rate cuts, because recently we saw them dropping their rate in the beginning of August. They dropped the rate from 4.25 to 4%. So look, if inflation starts picking up like this, then I don't know how much they want to go for the cut, but something tells me that maybe they're gonna pause a little bit. So yeah, it's on the contrary, they would need to start shifting their attention towards the possibility of hiking. But again, nobody wants to do that yet. Everybody will still want to stimulate the economy, so with lower interest rates, and I think that's the path that we're going to be seeing. We're going to be seeing for now, despite rising inflation. Looking at the pound here, the pound is strong against against DXY, against the US dollar index. We understand, and basically, yes, we're seeing this positivity in the British pound. So look, technically, from the technical perspective, 1.3588 zone. That's what I'm watching here very carefully. If I'm going to get this breakout, I'm going to lean a little bit more towards the upside, towards the current highest point of this year, near the 1.3788. Do I believe that this is the ceiling? I think that the 1.40 zone is the more attractive option, and or even maybe the 1.42 and a half area somewhere here, because that's near the highs of June of 2021, so, or the highest point of 2021. So I think that that could be a good option to consider. First, of course, let's keep an eye on the 1.3588. If we can clear that, we'll go for the highest point of the current highest point of this year. If we can clear that one, then I'm going to go for the 1.40 zone. So again, I'm going to go slowly on this, not rushing into things. In a way, what I'm from the very short term perspective, I'm really interested in something like this. Now, that would be an ideal scenario for me. So, if we currently, we're finding good resistance here, we're seeing a little bit of a retracement back down. We could test the 50-day EMA, maybe even drop to 1.3370 here. Test the 100-day EMA, which is approaching that area as well, and rebound, push back up, and we're good to go higher. So again, this is just ideal theory, because at the same time, what could happen here, we could establish a nice inverted head and shoulders pattern with the the area being around here. So this left shoulder here, head, maybe right shoulder, and then a push and a break of a possible break of a neckline. Again, either way, I'm still watching this one carefully. If we clear this neckline, then yes, great, I'll go to the upside. If we start dropping heavily here below the 100-day EMA, shown as the blue line, then I will just kind of shift my attention maybe towards lower areas, and maybe for the time being, or for that moment, something like that. So yeah, we'll figure this one out if we do get that break here. But at the moment, I'm kind of cautiously leaning towards the upside still. Very quickly, in terms of other inflation metrics here, from after UK is going to deliver inflation on Wednesday tomorrow. The EU is delivering their number here, the core inflation year rate final one 2.3, close to their target of 2%. Not to mention the headline one, so everything is fine here on the EU side. The guys continued. They did. The ECB did pause their interest rate cuts. So now they're taking a little bit of a pause, and certainly we're watching that very carefully as well. Current interest rate right now sits at 2.15 on the ECB side. Are they going to drop it below 2? I don't know. I don't think so. So let's have a look quickly at the Euro USD situation. What's happening in there? Well, I think that yes, the euro is it's strong, but I think it's stronger just because of the weaker US dollar. That's kind of it. So let's have a look at actually Euro JPY just to see, just to understand. JPY is currently not the most popular currency, because again, everybody's into stocks still. Euro, Aussie, Euro NZD, Euro CAD, everything is drifting. Yeah, so I would say the euro is a little bit on the stronger side. Probably against the pound, not really. Lately it has strengthened, but that's fine. But the Euro CHF is quite interesting as well, so keep your eyes on that one. This is an interesting one. We're near key resistance, so if we do pop above it, we could go a little bit higher, only up until this downside line, which is taken from the highest point of May of 2024. So yes, if we can break that, then we could go even further north. But at the moment, we're above all my EMAs. That's great. That's a positive, but there are some obstacles on the way higher. So, ladies and gentlemen, in terms of other CPI numbers this week, let me just quickly double check if I'm not missing anything here. I think that's kind of it. So yeah, Thursday, that's we don't have, yes, we don't have much. We have other economic data sets. Of course, PPI, the Canadian PPIs are coming out, so another kind of inflation metric. So keep your eyes on that. Yeah, the main event probably will be the Jackson Hole Symposium, which everybody is waiting for, and kicks off on Thursday. However, Powell's speech is on Friday. Ladies and gentlemen, I know this one has been a little bit of a lengthy video, but there was a lot to cover. So thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So please do comment. Let me know what you think. Yeah, we'll go from there, ladies and gentlemen. I shall see you in my next video update, in the next top news video. Thank you very much, and bye for now.